Today is January 31st, 2023. It is about 4:10 p.m. Eastern, 2:10 local Idaho time. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure, got a little VERI on there. I was actually trying to liquidate my position into the close, and I didn't quite get filled on everything on the offer. Oh, there's our snap move here. Snap looks like it just came out. Snap trading down. That's why I wanted to get through this disclosure. Sorry. Oh, I'm not fast enough. I gotta figure this out. 1400. I'm missing one. Missing one. All right. I need to be faster. Cost me a few bucks by being slow. Offered up 2 there. Struggling with that $10 right here. 86. I'm up to 86 there. Just got partialed. Revenue per user down. I haven't even looked at these numbers. Snap barely missed on revenue, it looks like. Adjusted EPS beats. EBITDA beats. Internal forecast sees Q1 revenue down 2 to 10% year over year. Fourth quarter headcount is down about 20% from its peak in mid third quarter 2022. I'm not allowed to talk about any trading I'm doing, buying or selling, once the YouTube video starts. Technically, I don't think. So I think that's what they told me. That this $10 is really a struggle right here. They can't clear that. It'll probably resolve lower. They're pricing in really big move. They're pricing in $2.50. We're down $1.50 or so from the close. So halfway, potentially halfway there. Got a pins alert. I think that means pins is moving down in sympathy. Snap's got to clear this $10. $10 dumping stock. Heavily dumping stock on the offer. Stock's off 10% from yesterday's close, so even more from today's close. Snap was having a nice day today. They can't clear this $10 seller for anything. So heavy. Look at that. I'm surprised the stock's not down ticking more and down ticking harder off of all the buying that's going off into 10. That doesn't break. Should break here. Wow. Still couldn't break it. See, those bids were piling up at $9.99 that didn't want to take the offer, and they still couldn't clear it. $10 is absolutely dumping stock. And again, I'm very impressed by how well they're holding this thing in front of 10. They should be selling it harder. So everyone that's buying $10 is out of the money. That's a lot of green prints into that $10 seller. But they're not down ticking it. So what's that tell you? It tells you there's a buyer in the market also. AMD down now. Whoo! AMD sees their gross margins declining. 50% estimate, 51.5. $10 still dumping in this snap. Fourth quarter revenue, $5.6 billion. So they beat on rev for AMD. Just an operating margin, also a little bit of a beat. It's that guidance, that gross margin guidance. AMD's up now. Oh wow, AMD's up nicely off that now. Okay. Help support the market a little bit. These ad-related businesses, social media companies are probably not going to be doing great here. Pinterest down to $25 after hours off the snap. What's Meta doing? Meta looks like it's off $3 or $4. Facebook. AMD trading really well though. Nvidia up secondary. Yeah, I'd say AMD compared to Intel is a big difference. New lows and Snap just came in right there. Very heavy on the offer. This Snap hasn't been able to go up on an earnings report in what, years at this point? It feels like every report. I don't think Snap has done better than down 10% on an earnings report in quite some time. Off 12% here, and again it's from yesterday's close. How exciting. I know I haven't started the meeting, but we got a lot going on. It's earnings season. We got the Fed tomorrow. The party does not stop this week. It's a wild one. Nice, Josh. Good job. AMD coming a little off highs. Nvidia pulling back a little bit as the secondary play. Pins is dumping at 25 on the offer. Arca just took at least 60,000 shares on 25. Snap still can't catch a bounce. At $10 is the big level. Wonder if it's the same seller. Pins 25, Snap 10. Well, you can see that there. You see, I mean, it's starting to go away. Oh, they broke the pin seller. You see the 55,100 shares that went off at 25 is one big print in pins. That was after 4,200 print and 100 and 900. It's all ARCA. The seller was an ARCA. I'm curious to see if they can snap this snap up a little bit. Get it? Snap the snap up. With the pin seller breaking. I was tempted to come in and buy some pins at 25, and the seller kind of scared me off. Snap breaking up here a little bit. Let's see what happens with the snap at 10 if the seller's still around. It's just so thick. That'll be the real test. There were so many prints into that $10 and it couldn't break earlier. The downtick was inevitable. Still can't go. I'm trying not to overread these sellers and snap at like 90 cents there and 86 cents because the stock is so thick. But that $10 seller was very, very real. What did they just uptick it to here? 997. So you're gonna usually you'll have some chiselers in front of 10 who are like, I know that there was a seller at 10, so I'll sell in front of it, and I could short sell there, and I could hit out into that 10 if I had to. Let's see if we get this test. Nope, 994 high. Show me 10 bucks. I want to know if the seller's there. Show me 10. If the 10 seller breaks, there should be a decent little pop above 10. There we go. 10 broke. Wow, that's a terrible pop. What did that we just go to 02? See if he came back. So what a smart seller will sometimes do is if the entire market knows that he's at $10, he'll step back a couple pennies and then come back in. So it lets the market trade up above 10 to sucker in a bunch of buyers, and then we'll bring the offer back down, in this case to $10. Like, you break like that and you go to $10.02 or $10.03, might have even been a through print. Looked like there was a lot of selling that hit at 10.02. All that buying comes in. The snap seller's like, let me just step back a couple pennies and I'll sucker in a whole bunch of buyers right into me so I can sell more. Yep, the seller's still really heavy. What's that pins doing? Pins hanging out above 25. 58K inside on EdgeX for snap at 88 cents. Stock's done 60 million throughout the day, including after hours action, so that 55,000 doesn't really mean anything unless it's repetitive. That's what you always want to see, if it's repetitive or not. False prints on my chart, but we know that the real high was like 02, 03. And we're getting some $10 prints again. Alright, show me one more attack on this $10 and so I can jump into this afternoon meeting with a little more detail. $9,800 on NASDAQ. Yeah, NASDAQ. Earlier it was ARCA. Now NASDAQ, see that was that ARCA or NASDAQ that just resized? That was ARCA. It looks like NASDAQ is doing a small little resizing or refreshing type of offer there. Yeah, earlier it was definitely ARCA. Now we might have a new seller on NASDAQ, or the seller switched ECNs. I find that those really big institutional type sellers actually usually don't switch exchanges very often. That's one of the best ways to be able to tell it's the same buyer or seller at different prices, is by the way it's buying and selling and the ECN that it's utilizing, because they tend to not really change for whatever reason. We had one more weakish attack on $10 there that couldn't break. The stock's still holding in pretty well on 10. I mean, I'm seeing EdgeX just printed 6,400 shares at 99. I'm not really seeing anything too big yet, because remember, it's really thick. $2,500 shares on the bid on EdgeX at 95. All right, we got a bunch of through prints there. Looks like both ARCA and NASDAQ are selling. Only NASDAQ is there. See on the offer now, only NASDAQ is there. ARCA's gone. Ooh, EdgeX just 2,300 shares, but it's really looking like this NASDAQ. They cleared out every other ECN except NASDAQ. The EdgeX buyer stepped up to 98 cents to apply some more pressure. NASDAQ dumping, ARCA joining a little bit. 3K on ARCA. Another through print of 1,400 shares at $10 on ARCA. Yeah, 1,500 shares offered on ARCA. It's not really the one that's concerning me anymore. It's the NASDAQ one. 5,000 shares on a dark pool. Through prints up to 01. Those aren't those. You know, seller didn't break there. They just through printed it. Those through prints can really, if anybody has like a buy stop at 01, can really trigger all that. They're annoying. Still, this is incredible how much selling is going on at this $10 that it won't even lift. Inside again, another 1,500 shares on ARCA with a NASDAQ refreshing seller. Broke. Get out of here with this 0203. I want to feel confident that the seller didn't just step back 2 or 3 pennies like what we saw earlier. And I see nothing to give me that confidence. Show me like a tick above 05, and I'll feel confident that the seller's done. Look at that. Massive selling at 03. Just got filled on a through print. Wow. Yeah, that's not what the break of a seller is supposed to look like. Went to 05, and 05 was just kind of dumping. I think the 6 and 7 prints were all through prints. I don't think any of them were. I don't think 6 or 7 was ever inside offer. All right. Yeah, pins gave a nice bounce. Wow, yeah, very nice bounce. Shame on me for not buying that 25. All right, I'm going to keep an eye on this snap on one screen, and we can attempt to do an afternoon meeting on the other. All right, so we had a pretty strong day for the market, a pretty good comeback day, and an especially good comeback day if you kick us off at 6:30 a.m. this morning when we were making pre-market lows and we were set for a pretty nasty gap down. We were trading, I don't remember exactly what the price was, something like $3.98 for the SPYs. Pre-market at 6:30 Eastern when we made lows. We started to dribble up. The Qs in the IWM are really testing this low from Thursday that I've been saying is kind of a line in the sand for your short time frame bulls pre-market. They actually got slightly below it. So Qs got down to like 288. The real spot I'm paying attention to on the downside is 288.51. IWM, the real spot I'm paying attention to is 186.29. I think we got to like 186. And then we started to bounce pre-market. We had that, what exactly was that number at 8:30 this morning? It was a, it was related to employment, how much money people are making, right? I don't remember honestly what it was, but I remember that it came in lower than expectations, which basically means that people are making less money or less than what was expected. The market interprets that in a positive fashion because if people are making less money, that is good for inflation. So that's like the one real spot with this market where, you know how we always talk about good news is good news and bad news is bad news, except for when good news is bad news and bad news is good news. It really seems like the one spot where we're seeing in a major way that good news is bad news and bad news is good news is in employment. Meaning, if people are making less money, you think that's bad news, but it's actually good news. The market will go up on that because it means that they're not spending in the same way, and inflation is more likely to potentially work its way down. And it's kind of been the one big thing that the Fed keeps pointing to when they're worried about inflation, is that they haven't seen those jobs numbers really come down in the way that they want them to yet. So that happened pre-market. I can even pull up a pre-market chart for us to look at. Yep, so here's that low at 630. Here's 830 where that number hit, and you can see that the market ripped up. So this morning when we were originally looking at a down market, by the time we opened up in positive territory. We did our morning meeting at 9 a.m. We kind of strategized somewhat similar strategy to yesterday. I thought that where we were set to open pre-market at 6:30 a.m. technically should be a spot where you want to come in and be aggressive to the long side. I have very purposely been being not aggressive with my trading yesterday and today because I want to get through the Fed and I want to get through the earnings reports of Apple, Amazon, and Google on Thursday. So I did do some kind of buying back of my positions pre-market really early. That worked out pretty well for me, but I didn't do anything too aggressive. And by the time we opened, a lot of the reward potential was taken away, and I saw no real reason to be particularly greedy and particularly aggressive. But with that said, we had a pretty nice day intraday, especially into the close. I guess we had some end of the month rebalancing where the S&P caught a really big bid. Treasuries, this TLT, caught a really big bid, so that helps bring interest rates down a little bit. And it turned out to be a pretty strong day. So at the end of the day here, the S&P is up 1.3%, the Nasdaq's up 1.25%, and the IWM is up a whopping 2.4%. Once again, that IWM leadership was key. If everybody remembers, pretty early this morning, I still have the SPY chart up. This price action for the first 45 minutes of the day for the S&P and the Nasdaq was very difficult to trade. We were breaking highs and then breaking lows, and then breaking highs and then breaking lows. It happened like 4 times. Break highs, break lows. If you're going long, you're getting stopped out at new lows. If you're getting short, you're getting stopped out at new highs, and you're not getting any follow-through on either direction. But the thing to keep you optimistic was this IWM. Russell 2000, our consistent leader for well over a year. Check out this chart compared to the SPYs and the Qs. SPYs were basically stuck between 401 and 402. Qs are stuck between 290 and 292 roughly, and IWM is working its way higher. Finally gives a technical pullback at 10 a.m. that creates a higher low, and this thing was off to the races and was our real leader all day. It's up the most on a percentage basis. It's really cleared with authority that key 188 breakout level that we've been looking for the Russell, and where this Russell closed, this chart's outright bullish at this point just about. On multiple time frames. We have a higher low in December versus the low in October, and we have now officially got a higher high on a closing basis with today's high above 190 versus the November high, which was the last big one at 189.56. So your Russell here, small picture is bullish, intermediate pictures kind of turning bullish, big pictures even turning bullish. I still do have a declining 200-day, which makes me nervous, but this Russell is a leader. Price action on this thing looks phenomenal. Oh, Snap's trying to get above 10 again. Do we have confirmation from the SPYs and the Qs? Yeah, we're working on it, right? So our SPYs here are continuing to hold above 400, which is the key from the downtrend line. But the IWM 188 equivalent for the SPYs is 410. So we don't officially have like a big picture higher low and higher high on the SPYs as far as I'm concerned, unless we're actually able to get and hold above 410, very similar to what the IWM did at 188. So we don't have perfect confirmation here, though we are holding above our downtrend line, which is solid. What about the Qs? That Q equivalent, I think, is 295. That's a little bit rough, but I think it's about 295. We actually got above that when we were very extended 2 days ago, came back down. Today we were unable to close above that. So we don't have full confirmation from the SPYs and the IW and the Qs yet, but the IWM as a consistent leader, if it's the one that's doing it, is solid. Now, with all this said about our big picture technicals, we've got another Fed meeting tomorrow, and the Fed has been known to move this market. I mean, the last time the market was looking pretty bullish, we were back here in mid-December, and then we had a CPI number hit followed by the Fed the next day, right? So the CPI hit on the 13th, which they initially bought up because it was good but sold it off intraday. And we never really got the opportunity to see how the market was going to fully play out that CPI, because the next day on the 13th, on the 14th, 13th was CPI, December 14th was the Fed day. The Federal Reserve came in and they just sunk this market, and we had a big old down move from that CPI high of basically 410 to 4 trading sessions later, we were trading down to 378 or so. So going into the Fed tomorrow, what do we expect? And I'm seeing your question in the corner of my eye there, Steve. The market pretty much has, last I saw, just about a full consensus at 25 basis points. So remember, whenever we're coming into an event like this, it's not as much what the market does. It's not as much what the Fed does as it is the Fed versus expectations. Because if you just think about it on the surface of things, the Fed is going to lower their increases on hikes, most likely, from 50 basis points to 25 basis points, and that would be dovish, and that could be interpreted as bullish. But the market is already fully expecting and fully pricing that in. I think last I saw it was like a 95% chance of a 25 basis point hike. I don't know if anybody has seen anything more recent, maybe from today, where they can update that number. So that's the big expectation. So what are potential surprises? Potential surprises is 50 basis points. Potential surprise is 0 basis points. I really think that the 25 thing is what's going to happen. The Fed really likes to follow through with expectations for their credibility. But should 50 basis points happen, the market probably gets destroyed on it. If 0 happens, I'm actually really curious to see how the market would react to that. But I don't think I'll find out. I don't necessarily know that the market would interpret that as positive. Yeah, I'm seeing Josh saying that. Basically, Josh saying that that pop would be the short of a lifetime. I'm not sure about the short of a lifetime, but I could definitely see the situation that you're talking about, where you get an initial pop of, oh my gosh, they're not increasing interest rates at all, to then the market selling that because the market is like, wait, why the heck are they not increasing interest rates? What don't we know about the economy? But I don't think either of that's going to happen. I think that 25 basis points is what's going to happen, and if either 50 or 0 happens, that's going to lead to a much bigger move, and there's a good chance that move would resolve, I think, to the downside in either circumstance. The big thing is going to be the language around it. What do they signal for going forward? We just saw Canada with kind of a surprise that they're no longer going to be increasing interest rates, that they're going to keep that stable. My expectation, I think that this is similar to the market's expectation, is a little bit of a dovish move of bringing it down to 25 basis points coupled with hawkish language. So that, I think, is what best accomplishes what the Fed is looking to do. Because what the Fed, for a long time now, and look, we all rightfully have given the Fed an extremely hard time about being too easy for too long. But if you move past that a little bit, I personally think that the Fed has done a phenomenal job since then. With what they've done, how they've worked inflation down. You know, the market we haven't really gotten into this area where we are coming into, you know, a hard economic landing, where we go into a massive recession, but yet inflation has continued to work its way down. So what do I think best serves the Fed's purpose, which is what I think that they'll probably do, is, all right, we'll begin to lower to 25 basis points, but we'll keep our language hawkish. We'll say higher for longer, but we'll also say it's going to be data dependent. So if that data does come down with inflation, they could potentially shift and only do even one more 25 basis point hike after this one. But the big thing, and that really, I think, seems to be what the market expects also when you look at what the Fed futures have been pricing in, right? Because we haven't been pricing in a 5.5% terminal rate. We've been pricing in, I think, not even quite a 5% terminal rate. So we'll see how all that plays out. And then I just don't know how strong of an effect Powell's potentially hawkish language will have on the downside of the market this time around. That's really going to be the big thing. I don't feel like I have a good feel for it. Josh, I think you said earlier that the S&P is pricing in a 53-point move, higher or lower. Do we know what that is on a percentage basis without me attempting to do math off the top of my head? I'd love to see that number on a percentage basis. But yeah, so we'll see how that plays out. You know, from a trading strategy perspective, tomorrow with the Fed, the opening price action is usually typical. Typical price action of price discovery for the first hour. But from like 10:30 to 2, you usually don't want to do very much trading at all. Again, that's obviously Eastern time. You don't want to do very much trading at all. The market usually kind of flatlines or it's choppy. Everyone by that point is just waiting for 2 o'clock for the Fed announcement to actually come out, and that's when the fireworks will happen. I can't tell you right now if we're going to resolve higher or lower, but I can just about promise that we'll see a lot of volatility. So expect volatility and a potential directional move. One other thing worth noting from these recent Fed meetings is that the bigger moves have actually been happening during the press conference and the Q&A of the press conference, and less on the actual announcement. That's what we've seen recently. So at like 2 o'clock, when the announcement happens, we get a lot of volatility, but the bigger directional moves have actually been happening starting at 2:30, which is when the press conference typically begins. So that's all I got about that. You know, and again, just with today's game plan, my game plan was to still have a little bit of a less is more approach, but we still had some fun trades. I ended up having a couple okay ones. I had a loser. I started my day by trading this Boyle for the first time. I got involved in this natural gas that all you guys have been looking at. I got shaken out, if you want to call it that, by keeping things tight and getting stopped out on the way down here on this down move here that was like post noon. For a very small winner because I was kind of being greedy on it, but I was also trying to raise my stop a little bit. So I got stopped out, and then there was a lot of volatility. At 1 and 2 o'clock, we had some news hit at 2 o'clock that helped after an initial downtick kind of bring nat gas up a little bit. So nat gas actually ended up closing decently well, almost on highs, but it did it without me. So I traded this one off the open when that initial kind of volume came in early here at 8 a.m. I was trading kind of off that low area, managed to not get shaken out just by a little bit here on this low, and ended up getting out of the position there. So that was one thing I kind of traded intraday today. The AI, everything's been about the artificial intelligence. I didn't trade AI directly. AI closed up 20%. But artificial intelligence is the key word of this market environment right now. We've seen it in the past with a whole host of things, crypto and whatever. There's been a bunch of them. But now the hot topic, the topic du jour is AI. So you can see this AI chart's been given a big move. I know we traded Sohn the other day. Didn't stick with the trade through today. That one gave it a little bit of an intraday move. But then today you're getting moves from like Path, which I am in, which I was able to make a couple bucks on. This Hyper we saw get halted and I bought this hyper very small after the halt, caught this move on very small size, stopped myself on the way down to make a very little bit amount of money on that. I traded this figs off this bull flag and lost money on it because the bull flag failed. I did that small, so it was a small loser there, but I had my stop loss in, I let my stop trigger, took my loss, and then my best name of the day was really this Veri, V-E-R-I, when Pat was calling out the bullish option flow that was coming in. I think he said February and March 1250s were coming in, so that put this Veri on the radar. I thought I was chasing a little bit. Let me try to find my chart. I thought I was actually chasing a little bit when I got it. Yeah, well, I was. The big volume kind of came in on this big move, so I chased a little bit and then put bids out to buy a little further, kind of using the volume bar low as my out. And I ended up actually being able to have an okay amount of size for as this trade, kind of gave great follow through. Traded it throughout the day, but it pulled back a little bit too deep for me. Gave a little bit too much of a tail. I'm not really looking to have extra swings on top of what I already have anyway. Going into the Fed, I'm being a little bit conservative. So I closed out of just about my entire position into the close, and the only reason it's not 100% of the position is because I've got one little baby offer that didn't actually get filled into the close that I'm stuck with, if you even want to call it that. I could just hit the bid at 842 right now, which is inside bid to get out. Maybe I'll do that after the afternoon meeting. Maybe I will, maybe I won't. Again, I'm going to keep it compliant with our position disclosures, but I do still have a very, very, very tiny position, almost somewhat accidentally, because I didn't fully get filled on very into the close. So that was more or less it for me. A few fun little trades to put a few bucks in my pocket during the day, but not being very aggressive, kind of based off of the discussed big picture game plan that we had. I just want to get through the Fed. I want to get through these major earnings reports this week, and I'm also. I should remind two things. One, I'm on vacation next week. I might be around a little bit in the mornings. I might be around for most of the day on Wednesday. Technically, I am officially on vacation this week, so you guys are going to be working with the great Patrick Haw in my absence, which is wonderful. And then I'm trying to find the link. Tomorrow at tomorrow at 4:45. So tomorrow's a Fed day. It's a big day. I have to end the afternoon meeting early because I'm doing, I don't even know what they call it. Greta's going to be upset. I'm trying to get the link to work that she provided, and I can't get the link to work. I'm doing it's going to be kind of a staycation here in Idaho. I got some friends visiting from New York, and I'm just going to go skiing every day with them. But this link right here, there it is. I'm doing this event that they're starting called Conversations with a Pro Trader or something like that. It's going to be live through LinkedIn. They're going to be having like a different, they're going to be having like a different guest every week. And again, you can find it for people who are on YouTube. Just go on LinkedIn and search. I think it's called Conversations with a Pro Trader. Conversations with a Pro Trader. So I'm the guinea pig. I'm first, and it's going to be an interview. I don't know exactly what they're interviewing me about, but it's going to be we'll probably be talking about the Fed a lot because that'll be the most recent thing. So I'm going to do a brief afternoon meeting, and then I'm going to do this Conversations with the Pro Trader thing. And I think that the idea is that they're going to try to make this, a weekly thing where they're going to be trying to take a different T3 Trading Group Pro Trader every week and interview them a little bit about their background, also talk about current events with the market. So I think they're starting with me, and I think that they're also lining up, Scott Redler, Patrick, Dan Darrow, and other, professional traders. And then, eventually there might even be an opportunity, if this is going well, for some of you guys who are listening, if you have an interest to be able to kind of talk. I think that at a certain point they might want to get the perspective of someone who's more entry level to see, how things are kind of going with them. So I think that's what they're trying to do. And anyway, I'm the guinea pig for the first one, which is tomorrow at 4:45 Eastern time. So we got to do a little bit of a shorter afternoon meeting. But what I don't get to talk about the Fed in our afternoon meeting, I'll talk about in the conversations with a pro trader thing. I don't even know what they call it. Like, what are they? It's not a podcast, right? What are you supposed to call this through LinkedIn? Whatever. So that's all I got for you guys today. I am happy to answer any questions that you may have. All right, scrolling up here into the VTF. I answered Steve's question already about the 50 basis points. Next I'm seeing here is from Jack. Do you ever set your stops 5 to 10 cents away from a high or a low to anticipate excessive market moves without getting stopped out of a good trade? I get this question a lot. It's a really good question, so I'm always happy when anybody answers it. Whenever anybody asks it, because I'm happy to answer it. The answer is absolutely not. Absolutely not. And I'll tell you why. It's just a slippery slope. How much do you do it by? So we want to utilize stop losses for a reason, right? Your stop loss should be based on a technical reason. What's the definition of a trade? A trade is something with a technical reason and a technical out. An out is also known as stop loss. So you can't have a trade without both sides of it. So your technical trade, your technical reason, why are you getting involved? It's a breakout, it's an inside and up, it's a hammer capitulation setup, whatever your setup is. Every appropriate trade setup also has an appropriate stop loss. It's the last pivot low, it's the ignition bar low, it's a gap fill, it's a daily, it's a hammer candlestick low, a tail. I love using pivot points as stops. Why? Because a pivot point is the spot where buyers took control from sellers or sellers took control from buyers. It makes it technically important. Now, we've all had situations, and if this hasn't happened to you, you haven't been trading long enough. We've all had situations where we get shaken out of trades that work. You put your stop loss in at the appropriate spot. It goes 3 cents past your stop loss, triggers that stop loss. You get out at the absolute low, and then the trade works great, and it does it without you, and you're sitting there with a loss, or best case scenario. I mean, it happened to me in Boyle today. Best case scenario, not making a really good gain as the trade continues to work without you. There are a couple things to talk about with this. One is, if you're trading stocks that have the layer of probability that I like to pay attention to, which is an increase in average volume, shakeouts happen less often. Shakeouts also happen less often if you follow the other rule that I like to utilize, which is your ADMA has caught up to the stop loss. If you're using if you're taking a momentum trade and you're using a stop loss that the ADMA hasn't caught up to, there's a much higher probability of a shakeout occurring where your idea is right but your trade stops you out. I really try to trade to be right or wrong. I don't like those tighter stop losses, those momentum stop losses where I might get stopped out and not know that my idea is wrong. I want to know when I'm getting stopped out that my idea is wrong. And even when that happens, I'll still sometimes get shaken out of positions and the trade will work without me. There are even, in the marketplace, stop finding algorithms. Everyone likes to have conspiracy theories that the market maker knows where your stop loss is, or they can read where my stop loss is on the exchange. I think that's a load of baloney, especially if you're trading through T3. My understanding is that stop loss are actually held on the front end. Are not sent to the exchange until they trigger. So that makes it even more impossible for that conspiracy theory to be accurate. But with that said, there are such things as stop finding algorithms. I mean, so I had a failed trade today, but I can use it to amplify the point. Let's assume that this FIGS worked as a bull flag. It didn't. It failed. I got stopped out. I'm glad I got stopped out. I'm glad I managed my risk, because otherwise I would have lost a lot more. And I was using the low of the bull flag basically as my stop. So the low of the flag here is 47 cents. So that typically means that my stop loss is going to be at 46 cents. The ADMA caught up. That's when you should get continuation. It totally failed. But what am I talking about when I'm talking about stop finding algorithms? So let's say for a second this thing shook me out. It tails down to 44 cents, shakes me out by 3 pennies, tails back up, and then works great. Well, maybe that was from a stop finding algorithm. What an algorithm can do is, and they're going to do this using math, is they say, okay, here's a bull flag. Everybody knows what a bull flag is, right? I mean, that's like, it takes 3 seconds. You don't need me to teach you what a bull flag looks like. You might need me to teach you what a bull flag actually is from a supply and demand perspective if you're an entry-level person. You don't need me to teach you what a bull flag looks like from a chart memorization perspective. You can Google it. You can find it anywhere. Everyone knows what they are. So let's say you're running a big fund. You got a lot of money. You're running a lot of algorithms. You look at this and you go, oh boy, look, a bull flag. I bet everyone's buying this bull flag. And if you are buying the bull flag, you know that your stop is supposed to be a penny below the low. So your stop is at $9.46. It just becomes a math question. How many stops do you think are there? And how much money will it cost you to drive the stock down to those stops? So whatever, you figure it out. It's going to cost me X amount of money to drive the stock down. And then what you can even do as a strategy is you figure out quantitatively, maybe using depth of book or something like that, that can definitely be deceptive because there's so much hidden liquidity in the market. I'm going to take X amount of dollars and sell X amount of shares to drive the stock down to where the stop losses are. And then I'm going to be putting bids on a few pennies below where I think those stop losses are to cover the short selling I just did to drive it down and to come in and get filled to make money on the short and get long for when the flag now can actually work because we got everybody out of the position. And it just got shaken out. And if that happened to you and you got shaken out by 3 cents and the trade works, you go to yourself, oh my God, I should have made my stop 4 cents down instead of 3 cents down. Or, I should have used an extra couple of pennies. And then the next time it goes down 6 cents. And you go, wow, I should have used 10 cents extra. And the next time it goes down 12 cents. And you go, wow, I should have used 25 cents extra. The point is that there is no precise way to come up with any type of number on how much extra room you should give it. And all that's going to end up happening more times than not, especially if you're trading the right stocks that are in play, that have the right amount of volume, because if it's got the high volume, by the way, the reason why it's more difficult for those stop finding algorithms to work is because higher volume means it's going to require many more dollars to drive the stock down to where you think the stop loss is going to be. And if you attempt to do that and you're wrong, it can be very, very expensive in an in-play name that's moving rapidly. So there's no way to come up with what that right number is. And you're going to end up losing way more than you would otherwise. So I don't think you want to play the conspiracy theory game of, oh my God, they know where my stop loss is. I think you want to trade the right stocks, and that occasionally you're going to get shaken out of things that work because you're in a game of probability. And again, if you're trading the right things, there's a lower probability that it will happen, but there's still not a zero probability that it will happen. And the only other thing I would say that we do as a team a decent amount, and I do as well, is sometimes, and I wouldn't do it for like a bull flag like this, but sometimes for like daily levels, especially with like the SPY or like Alibaba or the Qs, instead of, but like if you know that, I don't know, just to make something up really easy, if you know that SPY 400 is a big support level, so traditionally the way you trade support is to buy in front of it. If you think SPY 400 is big support, you would buy at SPY 450 cents. And put your stop loss at SPY 400 or SPY 399.99 or something like that, and take a support trade. A lot of times what we do now is we don't buy. Well, I don't do a lot of pure buying off support and resistance. But what I will do is I'll watch the stock come, or in this case the market, come down to 400. I'll let it pierce 400, shake those people out, and then I'll buy it on the way back up through 400 versus whatever the low is that came in. But I'm still going to use the low that came in. So in other words, if it breaks 400 and it triggers a bunch of stops and it goes to 399.90, I'll buy 400 back on the way up, and then I'll put my stop loss in at 399.89. I'm still not giving it that extra 5 or 10 cents. I'm putting the stop loss where the stop loss should be based on the trade, but I understand that the market just shook everybody out who wanted to be long versus 400, which actually means that there's even a higher probability that the position can go up. Why is there a higher probability that the position can go up? Because anybody who was long just got shaken out, so they're not selling on the way up anymore, and as a matter of fact, they might have to rebuy on the way up because they got shaken out. So thank you for the question, Jack. I hope it helps. From Zachary, am I expecting a gap in the morning? The market will probably have a small gap, but I have no idea which way we'll gap, so I have no feel for that on this point. We closed on highs, so it probably means that there's a higher probability of a gap up versus a gap down, but we are also having a lot of earnings names report, so AMD will be positively impact the market tomorrow, most likely because it's up, but Snap and is probably also bringing down like a Meta will negatively impact the market tomorrow, so we'll see how we gap in the morning. I'm really not sure. Scrolling through here from DJ. What's the ideal execution for a shooter pattern? Is it basically the same as an inside 5 going off the last 2 candles? Yeah, so the term shooter, not to be confused with shooting star, because I know people get that mixed up sometimes. A shooting star is a candle with a wider upside tail. I don't see one here in front of me right now. I'm just kind of eyeballing this SPY daily chart. Here's an example of like a shooting star right here. Apple with the big tail that is, you know, on the way up. This is not a great one, but here's another one. This is actually a potentially continuation shooting star to the downside, or here's a continuation hammer. Basically, shooting star is the big upside tail that is more than 50% of the body. So that's not to be confused with a shooter. A shooter is 2 inside bars in a row. So the Uber daily chart has 2 inside bars in a row. We call that a shooter. And yeah, so all the differences between a shooter and an inside bar, or in this case an inside day with Uber, is that the rest was longer. The consolidation got even tighter. So the way you're going to trade that is going to be the exact same. You're waiting for the break of the shooter, so it lets you tighten up your execution a little bit. And then you, what the heck is going on? And then you kind of take that from there as far as the execution goes. Sorry, I'm just pausing notifications so things do not come in to the screen. From Noah, stops being held on the front end. Does that amplify slippage since the order will be routed last compared to orders on the ECN? I think it can. I think it can slightly amplify slippage that it's held on the front end. Yes. From Dave S. I tried a long today at 10:05 on the IWM. Okay. Where was it? Oh, I remember. This was so crazy at that time of the day when we had that big upside tail. It almost looks fake. Like the SPYs got all the way to the top of their range and then made new lows all on the same candle. This was so frustrating about this price action earlier today. The Qs did the exact same thing. And the IWM that was relatively strong looked like it was trying to give a great pivot, and then instantly it was making new lows. Let me read the rest of your question. I was initially trying to get back up to highs, but in that same 5-minute candle, it ended up continuing down before finally taking off for the day. I got back in on other plays a little later in the day, so I'm okay. I'm not perfectly catching the move up, but is there anything you saw that would have prevented this particular trade from failing? No, I really don't. And if anything, I know the market ended up working great. If anything, when this happened, it was almost a signal to stop trading for the rest of the day. The SPYs and the Qs especially were just so dang sloppy. Like I was saying in the beginning of the meeting, we're breaking highs, we're breaking lows, we're breaking highs, we're breaking lows. And then almost within one candle we broke highs and broke lows at 10:05, and you shouldn't even be able to get those types of ranges. But we're still in this low liquidity market. So we hit that point of the day, and I was like kind of throwing in the towel. I was like, all right, day before a Fed, just going to be choppy, is what it is. It's expected. And then right after that, we were actually finally clearing above 402 for the SPYs and 392 for the Qs that we kept looking at, and the IWM gave its real pivot. So I don't think that there's anything that you could have noticed there that could have stopped that trade from failing. It was just really wacky action at that time of the day and for the first like 40 minutes this morning. So yeah. From Andrew S. Could you post a few more charts that show your trades? Seeing how you manage your inventory of stock and assemble has been an eye-opener for me. I'd love to study a few more. Yeah, I mean, I throw them up there occasionally. You know, I don't like to throw them up, honestly, too often, just because what I'm doing is not necessarily always going to be right for everyone. But, you know, a lot of what I do, I think, as you guys know, is I like to have core positions and then actively trade around that core position. So, like, even in that vary that I showed earlier, you know, I've got this core position on, and I'm trimming and trailing, basically, is that constant game plan where I'm getting these bigger moves to the upside. I'm almost methodically taking some off and then buying some of it back and then selling it again and trying to create cash flow within the process of kind of catching the bigger move. And that's what I do, you know, with you know, a lot of my swings on kind of various time frames. I mean, I don't know, even like Apple, where I don't have much execution because it didn't do anything. You know, I'm selling a little bit. I didn't get to buy any back anywhere today, did I? Actually, Amazon might be a better example. Like Amazon, I sold to Amazon into 403, into 404. I rebought 40. Sorry, I sold 402. I sold 403. I rebought 402. I sold 403. I rebought 402. I sold 403, and then I sold some more 403, basically into the close. So it's just kind of like almost systematic trading back and forth for cash flow within the confines of holding, you know, core positions. And it's like I've suggested to a lot of you guys in the past, because my account's not your account. You know, we're a team here who are trading with vastly different approaches and vastly different account sizes. Where not everything is going to be right for everyone. So what I always really encourage is for people to, you know, sit down with an Excel spreadsheet and play with game plans and, you know, try to come up with all the different scenarios that a market or a trade can provide and figure out the ways where you can potentially make more or less money and how you can do things more aggressively or less aggressively. And again, what I like to do a lot is have these bigger core positions that I'm holding for bigger moves as I kind of trade around those core positions for like intraday cash flow there. So, and I do it in different ways. Sometimes I do it purely systematically based on price, and other times I do it a little bit more technically based on extension and mean reversion. Yeah, I mean, catching the pivots in Amazon today was probably more luck than anything. A little more systematic than anything. It just happened to be where the pivots were coming in. W is a daily shooter setup. Yep, 2 inside days in a row for this W as the ADMA is catching up. So you can have that on the radar for tomorrow. Alright. Am I missing anything on the YouTube? Let me hop over to the stream. See if anybody's in there. See if anybody's saying hello. The stream. See if there's any trolls. See if anybody's saying hello. The stream. Sebastian wants to know why Intel is not reacting to the AMD earnings. I'm not sure. Intel's kind of in a world of its own. Is Intel not trading up at all here after hours? Do I have a pre-market chart somewhere? I thought I did. Maybe I can. Oh, there it is. Yeah, Intel's not reacting at all. Interesting. Yeah, I don't know. AMD and NVIDIA sure reacted down to Intel. I think that the market's just realizing with this AMD report, and I haven't really looked at the AMD report too closely, that Intel is just in its own universe right now. It's just kind of been acting as a value trap, and the business has been continuing to deteriorate, and AMD and NVIDIA are eating their lunch. If you remember, in the morning meeting after the Intel report, I called for longs in AMD and NVIDIA off of that thought process. On this day, on the 27th, the market was gapping these things down initially. They gapped them down, and I was like, we should buy these, because the real reason why Intel's earnings report is bad is because AMD and NVIDIA is just eating Intel's lunch. And if anything, I think it actually means it's a buying opportunity. And I think the CEO in the call even came out and basically said it. They were like struggling to keep up. So, yeah. Thanks, David. Wish I could have shown my executions a little bit, but it's fun to talk about the tape a little bit in earnings related stuff when it's happening. All right, cool. 10 after 5. Nice. Yeah, I haven't been watching Snap as closely to see if the seller's still there. It looks like it. It looks like it. We'll see what the Snap's able to do tomorrow. And I think that the conference call doesn't start for another 20 minutes, which could move this thing further. Again, we'll see what the CEO has to say. All right, gang, I'm gonna wrap it up. Good day today. Good day today. I'm still here, Eddie Webb. Don't worry for the rest of the week. Next week I will be out. And again, tomorrow, check out that LinkedIn podcast or whatever it's called. I'll remind everybody again tomorrow. Have a great night.